All right, traders, a very warm welcome. I am Devang Mehra from the Financial Analyst, and I'm here to discuss with you the outlook for the market for Nifty, Bank Nifty, and what stocks you can trade for tomorrow, which is Wednesday, 10th of March, 2021. It also is the weekly expiry because Thursday is a holiday. It's Mahashivratri, I believe. So we have a holiday. The markets will be shut on Thursday. So that is why we've seen a reduction in our premiums of our positions for Nifty banks because premiums start to dive when you come closer to the expiries. Today things have worked out for me. The plan I had given you last night has worked out for me, and I hope it has worked out for you as well. And I want to discuss about that for a bit. What I have done, what was my position, how much I earned, and then we'll move on to what we can expect tomorrow and what should be the positions we can take tomorrow. So yesterday I told you something very clearly about Bank Nifty, and I said that if the markets want to go down, I said this very clearly. If the markets want to go down, they have to open flattish around 35,200 range. And when that breaks in the first 1 hour, so we will be getting a good aggressive fall. And that's the time where we become aggressive sellers. But did that happen? It didn't happen. So you could not be aggressive sellers in the market. Why? Because the support of 35,000 is still intact. Point number two, I told you very clearly that if the markets are opening gap up, you will be getting another volatile and a range bound day. Exactly what has happened. Markets shot up, it again went down, again shot up. It's closed off the highs, but the main important point is that we are continuing with our sideways markets, volatile trades, and it is becoming difficult. And I'm going to say it again, guys. You do not have to eat the entire pie. Just grab a very small slice of the pie. Markets are giving you easily 500 600 points every single day. Just catch 100 points, and that's exactly what I have done. I'm going to show you my trade. I'll tell you why I took that trade and things that follow. So I took a trade on Bank Nifty. I took a March 35,000 p. Looking at that, a lot of people ignore this. I took a March expiry trade. Very simple. I do not trade in the immediate week expiry if I have a positional view. Number one. Number two, I took 35,000. I wanted to be safe because when I started this trade, I was planning to hold it for a long time. But eventually, when the things played out, I booked my profits in the end of the day. So 35,000 P. But what is important is I took a March expiry. A lot of people don't understand this. Yes, March expiry will be expensive, but whatever is expensive also carries safety. A lot of people lose money in options because they want to go with the same week expiry, and that literally always decays them out and they lose a lot of money. So please keep that advice in mind. So I clocked in about 45K, which roughly converts to a 20% ROC. I was happy with that. I didn't take a lot of other trades. I was happy with what I got, and that's what trading is about. You have to be disciplined when markets are moving very volatile, when they're moving up and down with a very strong force. Just be patient. If you're getting a good sufficient profit according to your capital, just sit out, because eventually it's not about earning big profits, it's about being safe in the market. That's what I tell my subscribers every single day, and I hope you learn from these small points. All right. So the next thing is, why did I take this trade, right? Why did I go contra on the market? Very simple fact of matter. Try to understand, guys, round numbers, they are never broken in one go. What I mean by round numbers basically means a number like 35,000 on Bank Nifty, 36,000 on Bank Nifty, something which is a wholesome number. 200 numbers on ITC, 400 numbers on Wipro. You all remember these numbers. 1,600 numbers on HDFC Bank. So I'm not saying they can never be broken. They can be broken. But our job in the market is to be disciplined. And that's what exactly I did. So today we were approaching 36,000 on Bank Nifty, and it was a round number. And I knew for a fact this will not be broken in one go. The second reason was, if this level had to be broken, markets will not have opened at 35,600. They would have opened somewhere around 35,800 or 900, so that it can be easily broken in one single go. That did not happen. So if I zoom into the charts, 15-minute charts, number one, I'm also getting a good trend line resistance over here. Point number one. Point number two, round number cannot be broken in one go. Point number three, if I look at the price action, I'm getting a good shooting star followed by a doji. And when the lows broke, I took my 35,000 PE here. I could have earned more profit if I took a same week expiry, but eventually it's always about being safe. And that's what exactly I've done. That was my logic of the trade. When did I exit? Somewhere over here. Why did I do that? Because my expectation was that maybe today 35,600 will be broken. Why was I expecting that? Because markets were not able to come off the lows. Every single candle was closing on the lows, but immediately when these lows started to break, that was a time where I became cautious, and I realized the markets are volatile. I need to be happy with what I get. That was my trade. I gave that trade in Discord in our forum. So if you took that trade, give it a thumbs up, guys. If you like my analysis, if you like to attend these videos, let me know in the comment box, and click on that bell icon. Tell your friends about us. It'll mean a lot to me. Now, another very, very important reason, that was the price action reason. But every single day when you come to my channel, I always tell you one thing, that technicals is only 50% of the market. Do not focus your entire energy on technicals. And that actually means a lot. You need to know what's the logic behind the markets. What is happening? There are so many things involved. Number one, I want to show you the data. I am very sorry I could not post a video about the data last night. I was too tired. But I want to show you for a second the data that was out yesterday. Give it a minute, the screen's loading right now. So this was the data that came out 8th of March 2021. I want you to look at what really happened. So on our Discord forums, I told you very clearly, I'm not going to get into calls. So I'm not saying you can't make money on calls. You can make money on either side. Markets are moving 500 points up, down, and up and down. So whatever you find comfortable, get in the direction and make money, because right now we're in a range bound market. And as long as the range bound markets continue, you have to keep on scalping. You cannot plan positions which are going to extend beyond your resistance or beyond your support. So you have to keep that point in mind. Look at the 8th March FII-DI data that was out. Something very, very important, the FIIs. If you look at the index future data, they were only holding 10,000 positions, contracts. That's all. If you all watch data, this is a figure I have not seen in a long, long time. I remember in November and December, when in Indian markets, huge money every day, about 3,000-4,000 crores was being pumped in by FIIs. The clients were, short on the market or index futures. But now it's like a reverse happening. Clients are literally buying in such huge quantities. They're holding 40,000 contracts. So if clients are bullish, markets had to come down today. They had to. They opened gap up, that's fine, but they had to come down today. And I was with that logic, and that's the entire reason I took a short on the market. Another reason, FIS continuously reducing the index future contract, and that shows me that they're not so strong on the market. And this was another reason why I was not interested in calls. Yes, money was made in calls, BTSTs, 36K, you made money in calls, but eventually it matters. Did I make money? I did. So my analysis held true. So if you like such kind of things, rewind it, see it again, because I see all these things again. Guys, data can be manipulated, but you have to understand, if your price action is conforming to your data, try to combine and take an entry based on that. Because in the market, it's all about taking risk. It's not about you forecasting what will happen in the future. It's about you going forward, taking a risk with a small stop loss, because you can either earn a big profit or small profit or a small loss. What you don't want is a big loss. If you're getting any of these three things, you are profitable. Another very important thing which I saw yesterday, continuously this figure of puts has been high. It's been ridiculously high, and this was one reason I knew markets had to come off today. If you look at the calls, they were only holding 48,000 calls. That's ridiculously low. And if you see the ratio of index call to put, that comes literally 3:1. For every put the FII is holding, they're also holding one call for that. A 3:1 ratio. That's not good. So because of all these things, I was expecting market to come off highs. That's the exact reason why I took a put on the market. Also, if you see the client data, clients really added the calls. So if clients are adding 50,000 calls, you have to trap them in the market, and markets have to come down. That was the analysis that I used for the trade. So just a small trade on Bank Nifty, but so many things matter, and so many things I consider when I take a trade. So that was what happened yesterday. Now let's talk about what can happen today, tomorrow, which is Wednesday in the markets, weekly expiry. One thing, please understand, weekly expiries are always volatile. I would say more often than not, they are volatile. I think for the last couple of weeks, it's been a volatile expiry. Volatile expiry means it's indecisive. Breakouts don't really happen. You get some kind of an indecision candle on the market. So these things do come out to play. So when you take a trade tomorrow, please keep these points in mind. Before I talk about Indian markets, extremely strong American markets, strong German markets, UK trying to come off highs. So in America, we're at yesterday's highs. Things are looking good in America on Dow Jones, S&P, rushing towards 3,900. I want you all to notice what S&P does for this trend line. So I've drawn this trend line, joining my highs on 16th of February, joining my high on 24th February. So let's see if S&P can break this, because it'll be a breakout then, and you can start to see aggressive buying. So currently we are getting a full-bodied Maru Bozu on the market. That's a very, very strong signal that we're seeing and witnessing in America. So American markets have really turned from 3720 levels. We're at 39. So a good 180 point rally in S&P. So are the markets turning? Are the markets ready for another breakout? I'll answer all these questions in a couple of minutes. NASDAQ. Now, this is something very, very important, because I'll be giving you a trade idea based on this. NASDAQ has done extremely well, and it's about 4% odd numbers, 500 points on NASDAQ. That's really, really well. The simple reason for that is dollar is trading about at 92 level. That's a very, very strong level on dollar. If you all remember November periods, dollar was about 89, and you saw how markets rallied. In December and January, dollar was about 90. Now dollars come to 92. So if dollar starts to, very sorry about that, I do get clumsy at times. So if dollar starts to turn, towards 92, 93 levels, IT sector will start to follow. The gains of dollar will start to trickle down to IT. I want you to keep that in mind. So even if markets fall, IT sector could be the heavyweight, could hold the markets up. So IT stocks in India tomorrow should be in focus. I will not be surprised now because of NASDAQ. I will not be surprised if Nifty IT opens gap up. So I want to talk a little bit about Nifty IT before I go over to Nifty. Yeah. So yes, today one very, very interesting thing that I noted, every sector, which has been holding the market up in the last couple of days has been down. Today, the advanced decline ratio, which we saw in the market, the advanced to declines, there were about 1100 stocks which were in red, and about only 600 stocks in green. So majority of the sectors, majority of the stocks today were down. That's the point number one. Point number two, only the banks were up today, and that also only in the second half. You only had the financials were up today, 2.5%, and the IT stocks have been up today. All the other sectors have come off highs. Reliance was down, everything else was down. So tomorrow, I think, is a good day that we can use to trade the IT sector. Let me open the Nifty IT chart. So it looks like a descending triangle, but I want to look at it as a consolidation or a range bound market point of view. Markets are stuck in this range on Nifty IT for the last 2 to 3 months. It's not participated in the budget rally from 13,600 to 15,200. Nothing's been, seen in IT sector. They've been holding the grounds. So I think now is the time that IT could start to perform. You can see this resistance trend line coming in the IT sector, and we have seen a good build up coming in the IT sector. So if the Nifty IT, breaks the highs today, or if you see 26,000 levels being broken on Nifty IT, you should be an aggressive buyer on Nifty IT. Targets one could be 26,400. Target two could be 26,800, followed by 27,200. These could be the targets we can achieve even in short term, could be a week's time. So Nifty IT is the sector I would want to be bullish on for this March expiry. Please keep mark on my words. What can be the SL on Nifty IT? SL on Nifty IT will be these lows somewhere around 25,000 levels, round numbers. So it's very important that tomorrow Nifty IT should give you a full forward bar close above this trend line, because it's been building up for a long, long time. I think if I open the Bollinger Bands, we are also sustaining above this middle Bollinger Band, which is the 20 MA, and it's about to break. So the first target could become the upper Bollinger Band, which comes up to roughly 26,400 levels. So I will be looking for that tomorrow. Not tomorrow, but we can see a good rally in IT stocks tomorrow. Let's see the individual IT stocks which can be performing. Infosys, you can see a very good build up at 1350 levels. I think above 1350, we can see a good run up in Infosys. Target one could be 1360, followed by 1380, which could lead to the all-time highs of Infosys. So Info becomes another stock. If Nifty IT performs, this guy needs to perform. So it's very, very important. One thing, guys, please understand. If you want to take a trade on Infosys tomorrow on the buy side, it's important it opens flattish, or it's important it opens at 1350. You will not be taking a long trade if it opens at 1320. You will not be taking a trade if it opens at 1380. Then the trade is gone, because then the profits have been gone overnight in this scenario. And if it opens at 1320, it means that it does not want to break out today. So maybe we shift it on Friday. So please keep a note on where they open. As simple as that. So also the disclaimer is there, guys. Whatever ideas I am bringing out to you is my own analysis, and I will be personally trading on them. So please, you consult your advisors. I have the right to be wrong. I also bear losses on a couple of days. So you'll see in this journey, like today I made a good 45K profit. Tomorrow I might make a loss depending upon my analysis. So you will learn from the mistakes I do, from the analysis, the right things that go my way. So please consult your advisors, have your stop losses in mind, and always do your own analysis. Whatever I say, I want you to learn from it, but please do not follow it blindly. The second thing is Wipro. Let's talk about Wipro for a second, and let's see how Wipro is performing. So this is another trade that you can take if you are comfortable with Wipro. Wipro has continuously taken support at 410 levels. So if Wipro breaks the highs of tomorrow, of today, which comes up to about 420-22 levels, so you can be long on Wipro even on positional basis, even in equity with your stop losses below the low of this range. That could work out for you. So it's important what stock are you comfortable with in the IT sector and trade that stock. Mindtree is now stock looking good. You can see multiply the levels being tested. Today, Mindtree tried to break these highs but failed. So the moment these highs are broken tomorrow, you can see a good run up in Mindtree. We have had a good consolidation. So it's possible that Mindtree will try to achieve this entire big movement. So we will be watching Mindtree. So whichever stocks, breaks out, you can try to go in that direction. TCS, another stock, it's been continuously held below the 20 moving average, the lower, the middle Bollinger Band. So the moment it starts to break these highs, which come to 30-60 levels, you can start to be bullish because there's no concrete level above that. Yes, target one could be 3100 because that's a round number. Above that, there are no concrete levels. So you can go for 3150s, even 3200s on positional basis. So let's see when IT explodes, and all these companies will start to explode. Strengthening dollar will help IT. Tech Mahindra, things are looking okay, same analysis. HCL Tech also looking very good. Multiply 975 has been tested. The moment 975 breaks, you'll be breaking the upper Bollinger Band on the daily chart. That's a very big thing. You can then start to see 1,000 number, 1,020, even 1,060 on HCL Tech. So it's important, please let these levels break first. And finally, LTI looks good. Again, a very, very strong build-up happening at resistance. Let this level break and you can start to see new highs. And about a 300-point move is pending in LTI. So the moment this will break and close, you will see a good 300-point move. That brings you close to 4,200 rupees on LTI. Now LTI is available in options also. That's a new update from last week. So this is the IT sector. Now let's look at the major stock, Reliance. What is Reliance doing? And we're looking at the data accordingly, try to understand what can happen in the markets tomorrow. So Reliance has been consolidating. The Nifty infra energy sector have been down today. Today Reliance did try to go down, but we have seen some kind of a hammer kind of formation. So we are in a good consolidated range of Reliance. So Reliance needs to break out of this range. Whichever side Reliance breaks will give you momentum. So it's not a good trade for tomorrow because the high is at 2240 and low is at 2150 levels. So Reliance has to either break this or this. So I don't think it should be traded tomorrow. Give it a couple of days and then maybe we can find a trade in Reliance. HDFC Bank looks very strong. We saw really, and remember this point I told you yesterday. I told you all very clearly that if HDFC Bank goes up 10 points, that equates to a 200-point jump on Bank Nifty. And today HDFC Bank was up 43 points, and you saw that markets today intraday were up about 700 to 800 points. So that's how powerful HDFC Bank is. So if you know how HDFC Bank moves, you can actually trade Bank Nifty very, very well. So keep that point in mind. HDFC Bank looks very good. I told you clearly yesterday that if HDFC Bank, if you want to short HDFC Bank, it has to open near the support. But today you open gap up automatically. There is no way you can short the market. You have to look at the long side only. So where the markets open can really help you to decide, do you want to go long or do you want to go short, and accordingly decide what you want to do. So HDFC Bank looks good. I mean, if the highs are broken, I think we will get a good movement on the upside for HDFC Bank. Even Kotak is looking strong. I have been telling you this for a while. to our mentorship clients. If Bank Nifty goes up, Kotak will be performing, and it's coming to the 2000 round number mark. So this automatically becomes a hurdle. Above 2000, I don't think it's ever crossed and closed above that. So 2000 is a very, very strong round number. Uh, if you are long on Kotak, I would say this is one point where you can partially book your profit on Kotak. The moment you break and close above 2000, you can see further rallies. But I would always prefer to build up here and then move, so that's more sustainable. Now talking about Nifty, I think we've talked a lot about the markets and the individual stocks. I want to talk about the data that has come out today. A couple of important points I want to discuss about the data. Yeah. This is the data that's come out today, 9th of March. It's loading on your screen. This is the 9th of March, 2021, the data that's come out. I hope you all know how to read the data now. If you don't know how to read the data, I would suggest you go to my December videos where I run you through how to read the data. What has happened? I want you to first focus on stock futures. Very important. Please understand, remember these. I've been observing the data for a very, very long time. Remember these points that, the index positions can change drastically day-to-day basis. But the true picture of the market is always given by stock future data. This is what I feel. Again, doesn't mean it has to hold true all the time. But what I have experienced, the most money I've made is by analyzing the stock future data. Today, see what has happened. Some very important thing has happened today. Today, clients have gone long on stock future. About 20,000 odd contracts. They have been long on stock future. They are bullish. That means that FIIs have to be bearish. FIIs have reduced 17,000 stock future contracts. Now, this is what I don't understand. If markets want to go up, which they should, I always say we are in a bull run, find aggressive dips, buy the market on those dips, and India will always be a bull run. I'm fully with you on that one. But on an intraday basis, if the markets want to go up tomorrow, why are the FIIs booking profits and exiting their stock futures? Because eventually index is nothing but a basket of stocks. So if the stock future contracts are being reduced, why index will also try to hold off? That's what I'm trying to say. So today, what I did understand with the data is why the FIIs are booking profits. Why are they exiting their stock future contracts? Why is it reduced? So this tells me that tomorrow will be a gap up. That is for sure. You can see SGX Nifty strong closing today in the markets. Tomorrow will be a gap up. But because of this stock future data in red, 20,000 odd contracts, this tells me that tomorrow it's expiry, so we expect volatile play. If you open gap up, this tells me that the gap could be filled or partially filled. So I will give you an idea, but just keep that point in mind. This is one negative thing coming in for the bulls. If you gap up, could be filled tomorrow. Second thing is the index puts. FIIs maintaining grasp on the index puts. Again, something I don't understand. If markets want to break out, if they want to go up, why is this being increased on a daily basis? I remember in November, December, this used to be in about 70, 60,000 contracts. It's literally double now. And it's been increasing for the past couple of days. So the FIIs are holding on to 1.5 lakh contracts in the puts. So this is another negative scenario, which tells me that if the markets are opening a big gap up, I would not like to be bullish immediately. I would like to exit my calls if I'm long on BTST, and I would like to maybe take a short of the market with a very small SL, because these things allow me to do so. Again, it's my analysis. I could be wrong, but something I will be doing tomorrow. Number two, let's look at the call data. In the index calls, clients have reduced calls. That means that they are bearish by 40,000 contracts. That's a very good thing. That's a good thing for the bulls, which indicates a good gap up tomorrow. If you look at the FII data, FIIs have increased calls considerably. FIIs have increased 20,000 calls. That also indicates a good opening tomorrow. Number three, index futures, something very interesting. 10,000 was the position last night. Today it's 27,000. So they've increased 17,000 contracts. Another signal that helping the bulls, and clients have reduced this figure. And that's a good thing for the bulls. Try to keep something in mind. As long as this figure of client index future, this is in green, this means that clients are net buyers on the index. That is not a good sign for the markets. And that's why you have seen in the last 2 months, markets have been range bound. Why? Because I feel that the clients, as long as they are holding this, as long as this figure is in green, I think markets will always try to get some selling pressure on the upside. And that's what we're being seen in the last couple of 2 weeks. So the moment this figure turns red, the moment the clients become short on the market, I think that's the best time. Buy every breakout, be a buyer on dip, and aggressively buy in this market. And that was the case in November. That was the case in December. We got a very good run up, and you should all check the data, and you will try to understand what I am discussing right now. So looking at the data, it's a mixed view. If the markets do come up, which is a good 100 to 150 point gap up, let me see SGX Nifty and try to understand the market tomorrow. Nasdaq's very strong, S&P very strong, DAX very strong, UK very strong. Let's look at the SGX Nifty. SGX Nifty, it's not showing over here, but let me just check on the internet. SGX Nifty. SGX Nifty currently is trading at 15,264. That's a 300 point gap up being indicated right now. So I don't believe 300 point gap up will happen, but I believe SGX tomorrow can open around 5,200 plus. I think this could happen tomorrow. And this is one idea that I want to give. So right now it's 264, a very, very big gap up. I don't know what's the news behind it, or is it just the euphoria of bulls coming in? But I think tomorrow markets, they should open 100 point up. They should open somewhere around 15,200 levels, 225, 30 levels. That could be a good opening that you can expect in the market tomorrow. So plan accordingly. There are two things that you can do. One thing is that tomorrow, when the markets open at those levels, you should obviously exit your longs on BTST basis, because BTST means that buy today, sell tomorrow. It means that you are coming to take the profits overnight. If you get any outstanding profit overnight, you have to book it. Do not get greedy. You can take another position later, but never get greedy when the market opens. What I feel is that tomorrow, I haven't taken any position overnight, and it does not make sense that if market opens at 15 to 50, if that's the opening price of the market, I don't think I'll be buying a fresh position there. So there are two things that you could do. The first thing is you wait for a dip. If you get a dip tomorrow, I think it should be a buyable dip. Let's go on the chart and understand what are the levels that can help you out tomorrow. Nifty. Let me first look at Nifty Bank. I think that will give you a very good idea. See, Nifty Bank, look at the daily chart. Something very important. Even today, the lower Bollinger Band, middle Bollinger Band has given the resistance. And I've been saying this for a while. We are in a range on Nifty Bank, 34,750 to 35,000, 36,400. 36,400. As long as this range is maintained, you cannot be aggressive on the market. That is what exactly I told you yesterday. You have to be silent on the market, trade in both directions, and make money in both directions. That is what you have to follow. The moment this range breaks, you have to become aggressive then, because even after the whichever side the range breaks, you can expect a good 1,000 point to 1,500 point momentum in the matter of a couple of days, because the entire last 2 weeks have been very sideways. So now whenever the breakout happens, it's going to be very, very solid. Now the question is, will that breakout be tomorrow? Personally, I don't think it will be tomorrow. The simple reason, it's an expiry. It's a weekly expiry. It's also a holiday on Thursday. So I will not be planning for a breakout tomorrow. It means that if 36,400 is broken tomorrow, I will personally not trade. It could give you a 500 point momentum, but it doesn't look like I want to trade that breakout. So I might miss that movement, but I will not. That's about the discipline I want to keep. So understand, do not trade every pie. Only trade that pie that you find, that you understand. So now let's look at an intraday chart and understand what could happen. So see, if you get a good gap up on Nifty, so a good 150 point gap up could mean you opening about 36,200 on Bank Nifty. That could be an opening that you could get. So I'll give you all the scenarios. Accordingly, you can try to adjust them and trade off them. This is the level. 36,400 is the level. My personal view is that any level to break must be tested 2, 3, 4 times. And this level has only been tested once over here. So if tomorrow markets open flattish, that could be a good area to buy. I think flat markets are the best areas to buy. It could give you a good momentum. As soon as 36K breaks tomorrow, you could be a buyer for targets of 36,400. And on expiries, always remember, if let's say you are opening in this range, just above the support, just above the closing price, automatically this closing price becomes support, automatically this becomes resistance. So we will be trading in this range, which is about 35,800 to 36,400. That's the simple rule that you should remember whenever you trade an expiry. Closing price of yesterday and the levels that you can see on the upside down, they become very, very strong levels. So if you open flattish, then you should aim for a buy above 36K, and this will become your targets. Secondly, if you open a big gap up, maybe somewhere around 36,200, I will suggest, just observe the markets for a couple of minutes. Try to see what the markets want to do. A couple of things could happen. First thing is that markets try to break it in one go. That is something I will not be interested in, because the data suggests me something, some profit booking can happen. Second scenario is markets open here and the full day they start to consolidate here. And in the last maybe 1-2 hours, then it breaks out. This is a time where I can take a positional trade, and I would like to do that. Because as I said, I want markets to test this level for a couple of times and then take the trade. So if the build up happens tomorrow on 36,400, then I would like to trade that build up. Otherwise, I will not trade that immediate breakout, because if you are trading an immediate breakout, SL has to come over here, whether you like it or not. So doesn't make sense for me. Second thing is, what if the markets are opening on the downside somewhere over here? You will still be a buyer, but your SLs will be very, very small. Try to understand this. You might not want to buy here, obviously, but you will only short this market. You will only short this market below 35,600. As long as this level is maintained, things are okay. You should maintain, and you should be a buy on dip person. And 35 is level followed by 35,000. So these are, the earlier support was this. Now 35,600 is established. So as long as the level is maintained, be a buyer on dip. But as soon as this level is broken, you can short the market and get this 600-point momentum in your favor. So it's important where you open. Another idea that you could do is, this is something that I might be doing, so please remember this. So we'll see how it worked out tomorrow. This is an idea. So one of my dates that I calculate is coming to be 10th of March, which is tomorrow. And that tells me that it could be a potential top in the market. Again, all these things, forecasting does not always make sense. But see, there's a possibility that tomorrow markets open somewhere around 36,400. It's a big possibility. Let's say you open somewhere around there. You have to observe what is the first 15 to 30 minutes doing. If the first 15-30 minute candle breaks this level, right? I'm saying do not short, right? Markets might go down, you buy the dip, again it will go up. Don't short, because we are at a very, very crucial point on Bank Nifty. If the first 15-30 minutes, let's say you are opening here, they break out, means they really want to go up. It really wants to go up. At the same time, let's say markets open here, the first 15-minute candle gives you a kind of a doji kind of candle or a shooting star, that indicating you that today I do not want to go above this level. So if that is indicated, I want you to take a risk, keeping a very small SL and go short on the market. I think I will be trying that. I will be personally doing it with Nifty. Why not Nifty Bank? Because Nifty Bank is strong right now. We saw all the banks participating, whereas the Nifty companies are a little bit weaker as compared to as seen in yesterday's closing. So what you need to observe is Nifty Bank or Nifty, what the first 15-20 minutes are doing. Because if they are rejecting, you could see a gap filling, because data suggests so. And again, once you fill the gap, you take money in that gap. And again, you could probably decide to take calls here at this price of 36,800. That could another be possibility. So you could try to do that. I hope you understood what I said. Let's talk about Nifty for a minute, and then we can wind up the meeting. Nifty is still in a range. You like it or not, you are in a range. The range is the small range is at 15,120 and 14,920. That's the small range. If you look at the bigger picture, it is still in a range between 15,200 and 14,900. The range is being followed. So aggressive buying should happen only above 15,200 levels. As long as that level is intact, you have to buy low, sell high. So the other possibility for Nifty, if you will short Nifty aggressively, when you can short it aggressively only below 14,900 levels, because 925 levels is very, very strong for the market. I want you to be a buyer on dip till then, or let's say you open flat. If you open flat in the market, you are at resistance. You could get a breakout in the very first 15 minutes, be a buyer on the market. that would be the best case for you. Target will be 15,200. That will become the target. If you open flat in the market, this level automatically becomes support. This will become resistance, and maybe markets will try to move in a 100-point range. That could be one scenario. Second scenario is, let's say you open gap down. If you open gap down somewhere around 15,050, which could happen, maybe something happens overnight, which we are not expecting. So this will be the range of Nifty 15,120 for 14,960 or 920. Then you will be moving in this range. On expiries, I always recommend try to play quick. Don't hold position too long because premiums decay, and try to play in the next week expiry on the month end expiry. That will be much safer. And the last idea is, let's say you open gap up somewhere around 15,200. Try to observe what the first 15 minutes are doing. If first 15-minute candle breaks out, sustains, it means the market wants to go up. But if the first 15-minute candles gives you a doji shooting star kind of a formation, I would be taking a short. I think my SL for tomorrow will be 15,200 on closing basis if you want to take it positional, or I can say 15,230 or 250. Find a number for yourself. It could be that could be the SL, and you could expect good targets, good 1:1 or 2:1 kind of a target return you can achieve. So you can try out both these things. So my idea tomorrow will be, I will obviously, if you ask me, will you be buying the breakout tomorrow? Because looks like SGX is quite up, and you might open very much higher. My understanding will be that tomorrow, if you open gap up, I will not be buying the breakout immediately. I will try to observe first 15 minutes and maybe take a short here. So let's see how that works out. We'll come back tomorrow in the post-market analysis and see the accuracy of our analysis. So I've given you the scenarios, try to work them out. IT looking strong, banks are looking fine. You can trade in banks. Don't be short on the market. Use it as buy on dip and keep on scalping as long as the range is maintained. That's all for now, guys. I will see you tomorrow in our video. Thank you so much.